sizes might be the same. To put it correct, Nasdaq is crazy. Just to put it in one word form whereby everybody will understand, Nasdaq is crazy, meaning that one simple movement could either make you a lot of money or wipe off your account, regardless of anything. So in short, in Nasdaq, there is no what we call risk management. In Nasdaq, you cannot say that you're going to apply risk management. In Nasdaq, you only deposit the amount of money you are willing to lose on that Tuesday. I'm going to make it clear again. You only deposit the amount of money you are risking, you are actually willing to lose or risking on that specific Tuesday. This simply means that you can't deposit 10,000 rands if you're not willing to lose 10,000 rands. Because even with lot size 0.01, Nasdaq can wipe your 10,000. Trust me. I've seen it. Nasdaq is crazy. So I'm trying to avoid a situation whereby people are losing the amount of money that they were not willing to lose in the name of having to make a lot of money. And I know when I trade, specifically when I trade, this is what most people don't understand about me. When I trade with 100,000, always know that it's the amount of money that I'm willing to lose for that specific trade. When I'm trading with 10,000 rands, it's the amount of money that I'm willing to lose on that specific trade. When I trade with 1 million rands, is the amount of money that I'm willing to lose on that specific trade. It has nothing to do with anything. It's the decision that I've made. So most people get to interpret that basically you need to have a lot of money in order to make money. It's not the case. You just need to talk to yourself and accept how much are you actually willing to lose for that specific trade. Now, in terms of the minimum amount which you can actually start trading Nasdaq with depends on the broker. Other brokers, it's $10. Other brokers, it's actually about $20. That simply means that you can either trade with about a minimum of 150 rands or with a minimum of about 300 rands, depending on the broker. So basically, this is all about the broker that you'll be choosing at that specific moment. And like I said, we are not recommending any broker when it comes to trading Nasdaq. Find your own. Find your own broker, and when you find it and it works for you, keep it to yourself. You don't have to go public about it, because the common trick with brokers is that if so many traders are there doing the same thing over and over and over, eventually they will pick it up. Eventually they will stop you guys. That's just a fact. However, this depends on the nature of the broker, because brokers are not the same. We have brokers who don't have much influence over what happens on the market. They only have influence over the spread that they charge you or the commission that they charge you, but they don't really have much access in terms of manipulation, all that. And then we have brokers who have full control. They can charge you a spread commission and they can still manipulate you. So it's best you always do research about the type of broker that you are using at that moment, right? And always stick to a broker that pays you. It's not really about whether a broker manipulates or not, because the market on its own, the original market from the interbank, is very, very manipulative. So you can't really complain about manipulation at all when it comes to Forex trading. It's a volatile market for a reason. Now, this is the MetaTrader 4 app that we are going to be using to trade Nasdaq. You can either use MetaTrader 4 or MetaTrader 5 or the relevant platform that your current broker supports. Now, this is the platform, MT4. Unfortunately, the market is off at the moment I'm doing this video, but that is not a problem. Trust me, that can never be an excuse or a problem. So basically, as I've already stated, that This is not beginners friendly. Therefore, I will not be explaining little details. I believe you already know what this app does and what's what. So basically, this is a demo account specifically. This is a demo account which I will be using to make an example as to how to trade Nasdaq. Now, as I've already stated, that brokers have different names for Nasdaq. Others call it US 100, others Nasdaq 100, others NQ 100 and S100, and so forth. And this demo account here calls Nasdaq just Nasdaq only. So you don't be confused in terms of the different names. It's always best to ask your broker. You can see on this demo account, Nasdaq is listed as Nasdaq, right? So this is our MT4. Now, basically, remember what I said. Remember what I said, that this course is not beginners friendly. If you are a beginner and you happened to have joined FBK NASDAQ. It's still fine. What you need to do is to go on our other website, which is fbkonlineservices.com, and download the free PDF. In one of the chapters, there's a chapter which specifically talks about pending orders, right? So, to make it simple, in terms of how to actually trade Nasdaq, we are going to be making use of this method. I'm just trying to edit it accordingly so that I can be able to type at the same time, so that you can be able to understand thoroughly. Let's see. Now, this on the right, it's our MT4. On the left, it's my notepad, which I'm going to be typing. Now, the time frame that you're going to be using for Nasdaq, time frame that you're going to be using for Nasdaq, it's going to be M1, right? You're going to be using M1 to actually trade Nasdaq, or you're going to be using M15. However, the time frame that I actually like or understand better, because as traders we differ, the time frame that I understand better is actually M1 time frame on Nasdaq. I use M1 to enter into a trade, and then after I've entered into a trade, I use M15 to actually do an overview of everything. Then after M15, I can actually go to M30. I can actually go to H1, which is 1 hour, right? Now, but the basic that you need to actually enter into a trade is basically M1 time frame. Now, I want us to look at our Nasdaq chart. I'm going to be making an example with what we have right now. So our Nasdaq on the MT4 is listed as Nasdaq, as raw as it is. Currently, it's on M1 time frame, as you can see. Now, with Nasdaq, uh, the spread, when it comes to the spread can never be the same, right? Other brokers, the spread it's quite low. Other brokers, the spread is quite high. I've just never seen zero spread on Nasdaq as yet, because I haven't really experienced much brokers, right? So Nasdaq has high spread naturally, right? Now, this simply means that you cannot cry about spread when it comes to Nasdaq, which is why it's crazy. The spread automatically it's high. It's not like currencies, and the pip value for the spread in this case, the spread is it's about 100. In this case, as an example, as you can see on my MT4, but it does not mean that the spread, just because it's 100, it's the same value of spread on a normal currency pair like CAD CHF or CAD JPY. It can never be the same. Nasdaq, it's in its own league. Now, in terms of remember, I've mentioned trading days. That is going to be Tuesday. And then time, it will not be 3:30. I want you to understand, it will be from 3:30, from 3:30 on Tuesdays, right? Now let's take a look at the figures that we have at the moment. We are precisely going to focus on the bid. The bid price, I believe that you know what the bid price is. If not, go and read the PDF that I've already mentioned earlier. So the bid price for Nasdaq is 9555.02. That is the actual price that we have for Nasdaq, right? That is more like the current situation that's happening in the market right now. Now, I'm just not sure about the details in terms of the points and pips when it comes to Nasdaq. However, allow me guys to use my customized language. The whole point is for you to understand, right? Now, in this case, if you are going to be using pending orders, because it's by choice, and remember, pending orders, at least you can be certainly sure that you are about 75% safe. If you use pending orders for Nasdaq, you are about 75% safe from actually losing your entire account, because definitely you can lose your entire account. Let's not run away from reality here. So if you're using pending orders, you're about 75% safe. And if you're going to be using market execution, you are about 25% safe. Now, this simply means that if you use pending orders, you are exposing yourself to about 25% risk, right? Risk of what? Blowing your entire account. And then if you're using market execution, you're exposing yourself to about 75% risk. I hope the numbers make sense. So I'm going to be starting with pending orders in this case. Pending orders in this case. I'm going to be starting with pending orders in this case. Now, the number is 9555.02. This, let's take for example, this is 15:30 p.m. This is just an example. This is 100. This is 3:30 p.m. and you relax. 3:30, when the number is like this, you relax. And then at 15:31, that is 1 minute, just 1 minute after 3:30, you relax as well. You don't enter into a trade as yet. And then at 15:32 p.m., now that's when you actually start setting your pending orders. You start setting now. Now you start setting your orders. Remember, at that market, at that time, Nasdaq will be moving. At that time, Nasdaq will be moving already. Nasdaq will definitely be moving at that time. So this simply means that at 15:33 p.m., your orders must be set. Your orders must be set, meaning that your pending orders must be ready already. At 15:33, your pending orders must be ready. You need to set them at 15:32. Now, we are going to be making use of 9555.02 as an example. Now, what we are going to be focusing on is the numbers before the full stop. Now, this simply means that the price is going to be this as an example. We are only going to focus on this area only. Now, the numbers after the full stop, we are not going to touch them, right? Now, what you do at 15:32, I'm referring to time. South African time. What you do at 15:32 precisely, you say on your calculator, or even though I don't think you need a calculator for Nasdaq, what you do is that the last two numbers, I'm referring to this. I'm trying to highlight them. The last two numbers before the full stop, that is what you're going to be focusing on, right? The last two numbers before your full stop, that is 55 in this case. So what you're going to do at 15:32, you look at where the candlestick is going on M1 time frame. If the candlestick is going down, you're going to start setting with your sell stop order. If the candlestick is going up, you're going to start setting with your buy stop order, right? Let's say in this case, the pending order at that moment is actually going down. That simply means you're going to start setting with your sell stop order. Therefore, you're going to select your sell stop on your MT4, a new order. You're going to select a sell stop, and on your price, when it comes to your sell stop, on your price, what you're going to do is that you're going to say 55. I'm just going to write it down. 55 minus 10. Remember, sell stop we always minus, buy stop we always add regardless, as many of you might be aware of how how we set pending orders. So that simply means that 55 minus 10 equals to how much? 45. Now this simply means that your entry for your pending order at 15:32 immediately, if the market is going down, therefore it's going to be 9545.02, or whatever the case it may be. The numbers after the comma, they can be random, it's fine. The numbers after the comma can be random, it's fine. It can be 10, it can be 15, it's fine, as long as the order is in. But in most cases, when I set my orders, I don't touch the numbers after the comma. In most cases, I just edit the last two numbers before the full stop. That simply means that your new price is going to be 9545.02. You place your order immediately. Now, when you are done with your order, you go for your buy stop order, because now you are done with your sell stop order. Now your buy stop order is going to be 55 again, right? 55 again plus 10. However, be aware that the moment you finish with your first order, the market might be moving the opposite direction. Now, this simply means that the market might have passed 55 already while you were busy setting the buy stop order, meaning that the market might have rejected. Therefore, you must look at the new price. Whatever new price, when you're setting for the buy stop order, let's say the new price is 61. The new price, I'm talking about the last two numbers before the full stop. Let's say the original number is 9561.02. Therefore, it simply means that you're going to take 61 and you add 10. Then after adding 10, it's going to give you 71. Now, this simply means that your final price for buy stop entry will be 9571.02. Now, this simply means that even if you start setting with your buy stop order, you're going to minus 10 on top of the number that you get, the two numbers that you get before the full stop. And then when you go for, when setting your buy stop order, you're going to add, you're going to add 10 on top of the last two numbers before the full stop. If it's 10, you're going to add 10, it's going to be 20. If it's 30, you're going to add 10, it's going to be 40, and so forth. And then immediately when you're done, when you go for the sell stop, before you use the previous number, make sure you look at where the market is at that moment. And then when you find the price, because the market will definitely be moving fast, you're going to minus 10 for your sell stop order on top of whatever number that you find at that moment. And I know now in your head it's like, damn, this is complicated. It's not so complicated. I will be showing you a live trading video. I will be showing you guys a live trading video. Therefore, it's going to simplify everything. Now, that's just how we actually set our pending orders. Now, if you set sell stop pending order, just before you set the buy one, already your market is opened or your trade is opened, then it's over for you. It's over for you. What you need to do is to stop setting the other order. Once a trade is opened before you finish setting the other order, then it's over for you. Then you go with the flow. Whatever happens, happens. No maini. Anything goes. Anything could happen. Anything could go wrong. Anything could go in your favor. So it's all about how the market will be behaving on that certain Tuesday. Now, if none of your orders are triggered, which is very, very rare, which takes us to what if the orders are not triggered. It is very, very rare. I've never experienced that in the past 5 months doing this. In the past 5 months trading this, I've never experienced a situation whereby my orders are not triggered, and mostly my orders are triggered within 2-3 minutes, or sometimes immediately after setting it gets triggered, because the market will be moving fast. So that is a very, very rare situation right there. Now, in terms of how long should you hold on to a trade? Basically, because anything could go wrong, naturally I hold on for a maximum of 2 to 3 hours. So it's up to you for how long. But you know how trading is. Once you make profit, it's very, very, very wise to actually exit. But if you decide to hold on, it's up to you as a trader. That's the decision that you have to make on your own eventually. Now, you can actually hold in terms of time. You can enter from 3:30 and exit around 7 p.m. It's still okay. You can enter from 3:30, exit at 4, 5. Anytime whereby you feel like now you've made enough profit, it's fine, because there is no maximum profit. That's what people are missing. You cannot get each and every little peep that's moving on the market. It's impossible. And then what you need to know is what goes up needs to come down. What goes down needs to go up. If you hold on for too long, let's say after 7 p.m., 8, 9, 10, you're still there, anything could happen now. Anything could happen. And it does not mean even around 4 or 5 or 6, anything cannot happen. It can still happen. So it's just part of trading. Don't be surprised. That's why when you make profit, mostly with Nasdaq, what I do is I target to double my account. Once I double my account, then I'm fine. I'm actually good to go. Now, in terms of lot sizes and everything, please, everyone, start trading with 0.01, because that is the minimum. But other brokers have a minimum of 0.10. Other brokers a minimum of standard lot 1.00. Always start with 0.01, just to make sure that you understand the power of Nasdaq, because I'm unable to explain it, because it is very, very crazy, so that you can experience it for yourself. And it's very wise to actually start on a demo account before you actually trade a real account with Nasdaq, just so you can understand the movement. Remember, if you miss this Tuesday, there's about 4 Tuesdays in a month. So you cannot feel bad for missing one Tuesday. That's what you need to remember. Now, that's for pending orders. Now we are going to be making use of market execution. Now we're going to be making an example with market execution, which is another method that you can actually use to open a trade in Nasdaq. Right now, market execution is a bit tricky. Now, remember what I said that about market execution, that you're going to be risking 75%, meaning that pending order, at least once it's triggered, then we are sure of the movement, at least, you know, even though it does not mean that it won't reject, but at least we have a surety that we've got things correct this time. Now, market execution, 3:30 p.m. Tuesday, you relax. 3:30, you relax. Remember your own market execution. Time frame specifically for market execution needs to be M1 time frame, right? For pending orders, it needs to be M1, especially when you are entering. But once your trade is opened, you can use any time frame you understand. It's fine. 3:30, you relax. 1 minute after 3:30, you still relax. Now, you can actually, from 2 minutes just after 3:30, now you prepare for entry.